So Jerome Powell just admitted that the Fed is split on where interest rates are headed. The SEC has approved new rules that could bring crypto ETFs to the market faster. We have JPMorgan is warning that a rate cut might actually backfire, and Coinbase is begging Washington to step in against state regulators. Let's dive in. So just in, as you guys anticipated, and everyone was right on the money, rate cuts did happen, but only 0.25 basis points, which is better than nothing and better than what we've seen over the past few years. And here we're seeing that Jerome Powell is saying that the Fed is divided on additional rate cuts for 2025. So U.S. Federal Reserve Jerome Powell said 19 members of the Federal Open Market Committee remain divided on additional rate cuts in 2025. During the press conference that he had earlier today, Powell said the central bank is trying to balance its dual mandate of maximum employment and price stability in an unusual environment where labor market is weakening, even as inflation remains elevated. So he said this earlier, and there was a lot of questions, right? So he's going back and forth with no clear answers for those that were asking him the questions. Even some people in the room were even asking Jerome Powell, is the uncertainty with rates politically motivated, right? Because there's been a lot of push from the President of the United States for interest rate cuts. And he just continued to deflect and give really scripted answers when it comes to that. But everyone is pretty much banking on additional rate cuts. We'll know this in 41 days. As it stands right now, there is an 87.77 chance of additional rate cuts. Okay, to get down the target rate, and that's what we're seeing right here. But I definitely think that we'll continue to have rate cuts, and I definitely think, based off of solely what Jerome Powell was saying at 2:30 p.m. Eastern Standard Time, it seemed like he was just dancing and tiptoeing and saying scripted answers and not giving clear, direct vision on interest rate cuts. So with that being said, we did see a small pump, nowhere near the pump we were looking at. Even looking here at CoinMarketCap, we see that, we're nearing altcoin season based off of this meter. But from a price action standpoint, didn't see a ton of crazy movement yet. Did see a few pumps. But the one thing I am looking at the 7-day percentage, mostly green. Okay. Mostly green. We go to crypto bubbles today, mostly green. Okay, guys, altcoin season, I think, is for sure here. It may look a little bit different. And I think for people to fall in love with this 4-year cycle that we've been accustomed to, the market conditions have changed. We have institutional investors here. We have hedge funds. We have governments involved in crypto now. So to suggest that everything's just going to follow this 4-year cycle like it always has, the sentiment's changed, the environment changed, but also the acceptance of this industry, of this technology, has changed. So with that being said, it seems like the perfect storm. We'll see. We have 41 days. The next FOMC meeting, 41 days, and we'll see how this plays out. It looks like over the next few months, we could see a ton of momentum when it comes to altcoin performance and overall crypto performance. Next up, the SEC approves generic listing standards for faster crypto ETF approvals. And the one thing that is good about what just happened is that the SEC filings on stock exchanges like the NASDAQ, New York Stock Exchange, and CBOE would streamline the process under Rule C-11, reducing approval timelines. And one thing that we're showing is that there are a few altcoins that are aligned with this rule, right? And it's been laid out there already, right? One of them, you're not going to believe. But we can say this. Cardano's in there. Bitcoin's in there. And guess which one's in there? Shiba as well. Laying the infrastructure for what that looks like when it comes to faster approval timelines. So no longer this keep pushing it out, get to a deadline, push it out, get to a deadline, push it out. People are getting tired of that. People want to take action and not be pretty much in limbo because of deadlines, because of really just lack of clarity. So each application would not need to be assessed individually. This will speed up spot crypto ETFs for sure. And I definitely think that the new listing standards will reduce barriers, like Paul Atkins is saying here, reduce barriers to access digital asset products and give investors more choice. That's all people want. All people want is more choice, more freedom to invest in what they want to invest in without having to worry about accreditation. Pretty much what the accreditation was it was pretty much people that were rich already are now qualified to get even more rich, right? That's what was happening. So the development was viewed as bullish by many industry pundits, and he expects a wave of crypto investment products to launch in the U.S. in the coming weeks. And this is huge, guys. This is huge. And one thing I really like about this is it's allowing people to have a clear standard of a crypto spot ETF, and they must hold a commodity that either trades on the market, that is part of the intermarket surveillance group with surveillance access, and or underlies a future contract listed on a designated contract market for at least 6 months with a surveillance sharing agreement in place. So shout out to Crypto Capital Venture who broke this down. The SEC approved the generic listing that we just covered, but this means crypto ETPs that meet the threshold can go to market in weeks, not months. 12 to qualify right now: Bitcoin, Ethereum, Doge, Litecoin, BCH, Link, XLM, Avalanche, Shiba, Polkadot, Solana, Cardano. Huge, guys, huge. Cardano specifically launched in March 2025. So currently right at the threshold, would have checked exact date. This is big, guys. This is big. So that crypto adoption that we've been waiting for, that clarity that we've been waiting for, we're right here on the doorsteps. We're right here. So potentially this is going to be a crazy, crazy bull run, and the stars are aligning. The stars are finally aligning for those of you that have waited and waited and waited. I believe that you will be rewarded. Next up, JPMorgan Chase warns Fed rate cuts could be ultimately negative for stocks, bonds, and the US dollar. Potential rate cut by the Federal Reserve this week could reportedly turn out to be negative for the U.S. financial market if it comes about as a result of political pressure and influence. The report cites JPMorgan Asset Management Chief Global Strategist David Kelly saying a rate cut this week could be ultimately negative, and pretty much saying that, and I get it, right? The rate cut means essentially more money printing, which means a weaker dollar, right? Which is what they mean. And they're saying here, I think the economy is gradually grinding to a halt here. On inflation, these numbers are very close to the line with what we thought. Inflation is gradually going up. The economy is gradually slowing down. That's what we thought the tariffs are going to do. It's going to slow growth. It's going to add to inflation. Businesses do not want to hire here. I don't think there's a huge ongoing jump in layoffs, but it's getting harder and harder to find a job because businesses are just frozen because they don't know what the playing field is going to be in regards to the tariffs going forward, guys. So a ton of uncertainty still in the market overall. At least that's what JPMorgan Chase is warning. And I think you just got to look at the big picture. Look at the big picture, guys. Big picture, JPMorgan Chase, I truly believe companies institutions like JPMorgan Chase want to accumulate at these levels as much as they possibly can. This is the same company that was banning people's bank accounts for dealing with crypto. This is the same institution that was, where the CEO was talking down on crypto only to begin offering it. Right? This is what we've seen. So look at what they're doing, as we say all the time. Look at what they're doing, not just what they're saying. Why would they? Are they saying this just because now they have our best interests? Right? Look at what they're doing for sure. Taking a look here at XRP. See how our XRP is respecting this trend line as well. Broke out, come back to retest. I think higher. Higher is optimal, up to 320, and continue upwards. That's what it's looking like. We'll see how we hold. Actually, we'll see how Bitcoin holds. As right now, it is overbought. I do think we can have a breakout with these two levels to continue higher, especially over the next 41 days. That is what we're looking for. 41 days, next FOMC meeting. We'll see what Jerome Powell has to say now on why he's cutting rates. Right. And pretty much see what is going to come out of what should be one of the catalysts for a super cycle, guys. One of a catalyst for a super cycle for sure. So pay attention to this, guys. A lot of green. This is what bull markets look like. If you've never been in a bull run, we didn't have this altcoin season meter here before. So we didn't have fear and greed back in the day either. We just had coin market cap, and there was none of these banners. Maybe total market cap was there. Didn't look like this though. But this is what a bull run looks like. Not the red. It looks like pretty much what we're seeing here in the top 10. This is what it looks like every single time. A ton of green. And we look at here where we're at in the cycle. Large caps. This is what happens. Ethereum's been outperforming Bitcoin. Large caps are going parabolic. That's how it starts. So as we go into phase 3, you guys know where we are. You guys know what to look for, right? The large caps. Large caps are pretty much top 10, top 20. Start really performing. That's what we want to see. That's going to be a catalyst. And then alt season, everything's going to go berserk. Everything. No matter if you're in the 200 club or even number 602 on coin market cap, you're going to see those go crazy. Large caps, mid caps, doesn't matter. Everything's going to go wild. And then typically what's going to happen is people are going to think this is going to go on forever. They're not going to exit. Then they're going to have to ride the wave back down. Now, I say that to say I'm not going back on what we said earlier with this is going to be different. And I mean that in regards to the 4-year cycle. To think it's going to be this exact same, it may not. Right? We could maybe go on for a 2-year cycle. It could happen. Right? And people don't want to admit that. It could happen. Markets could go up for that. It could happen. We don't know what's going to happen. Have your exit strategy, have your exit plan, and you'll be just fine. So just make sure you're ready for this bull run. Make sure you're ready to change your life. Hope you guys got some value out of this video. Keep moving forward in everything that you do. See you soon.